Estate Show. I am Joe, and I'm your host every Tuesday evening right here on WNRI 99.9 on the FM dial, 1380 on the AM dial. And we are here for you to talk about real estate and inform you of the latest goings on in the real estate business in southern New England, in particular southern Massachusetts and Rhode Island. I'm licensed to work with buyers and sellers of residential and commercial real estate in Rhode Island and Massachusetts. And this is the 12th year of the Joe Luca Real Estate Show. And I've been a realtor since 2006. And I work at a company called Remax Preferred in North Providence, Rhode Island. Currently, the market is still strong. Interest rates have still been, they've been lower than they have been in the past. Um, Not quite as low as we would like them to be, but we're fortunate in that people are still buying houses because rents are pushing people to buy houses. Rents are getting so high that folks are saying, wait a minute, if a couple of us go together, if it's, parents and grandparents or parents and adult children, and they combine their incomes, they can own a house and pay their own mortgage as opposed to paying the mortgage of the landlord. So, it makes a lot of sense. Some folks are doing it because, they want to be able to have an accessory dwelling unit. That's new legislation that was passed in Rhode Island and recently in Massachusetts. So grandma and grandpa can move in and live in a house that's much less expensive than to pay rent or buy their own home. Okay, so it makes a lot of sense. Right now, going to Mortgage News Daily, the interest rates are at for 30-year fixed rate 6.72%, 30-year FHA 6.15, 6.17 for 30-year VA mortgage. So these are still, they're getting lower. They were certainly over 7% for the 30-year fixed rate. The rate that you will get if you talk to any of my mortgage lender partners will be probably different because this is a general rate, and that would depend on your credit history, what your credit score is, as well as the type of home you're buying. Because if you're not buying a single family owner occupied home, everything else that you buy, the rate is going to be higher. If it's a condominium, if it's a multifamily property, if it's a vacation home, if it's just an investment property, those rates would be different. So it these is basically what I'm saying is this is meant to be a guide for what the mortgage interest rates are doing. Now, of course, people always talk about the Fed funds rate, and the Fed funds rate does have an indirect impact on mortgage interest rates. But many times the mortgage interest rate already factors in what the expected interest rate adjustments from the Fed are. So there's not usually a direct bump one way or the other when the Fed announces their new rates. But rates are still strong. Home values are still holding in Rhode Island. We're still, values are still increasing. I know that I've had several new buyers reach out to me, and we've been able to find houses for them and put them under agreement in pretty short order. I'm pretty talented, if I can toot my own horn, at finding good houses for my buyers that they like, that match their mortgage product, and then also negotiating a price that's acceptable to buyer and seller as well. A lot of times folks, they don't realize the importance of working with a realtor, especially if they're a buyer, because they say, well, I'll just work with the selling agent. Well, the selling agent, the listing agent actually is a better way to refer to him or her. The listing agent works for the seller. They are looking out for the seller's best interest. They have a fiduciary obligation to the seller, and an obligation of a commitment to confidentiality as well. When you are a buyer, you need to have a real estate professional looking out for your best interest. And what I do for my clients is I help them identify properties that best suit their needs, their goals, their objectives, and their timeline and their budget. And then we submit an offer, and I try to negotiate an offer that is acceptable to buyer and seller. And a good offer, when you have a transaction that's negotiated, it's win-win. If you're looking to negotiate a transaction where it's all for one party or the other, you're probably not going to be consummating that transaction anytime soon, because people, especially when they're represented, by a smart, professional, experienced realtor, the objective is to sell the house if you're an owner, to buy a house if you're a buyer. And if you try to get everything all your way, it's not going to happen. So you may think that your house is an $800,000 house, but the market may dictate that it's a $750,000 house. And if you're not willing to come to terms with that, you're probably not going to be selling your house anytime soon. And likewise, if you want to buy that $800,000 house and you only want to offer $750,000, you're probably not going to be buying that house, okay? And that's the same thing holds true if we're talking about a $400,000 house or a $600,000. The price doesn't matter. What matters is having your feet grounded in a place called reality, and that's where the market is at this time. So, without further ado, once again, we are very fortunate to have a guest this week, and I'm going to today our guest has to do with insurance, okay? P&C Homeowners Insurance, and I want to introduce our guest this week. Give him a warm welcome, Jason Zeramby. Jason, hello.
Hey, how's it going, Joe?
I'm going very well. If you could, please tell our listeners a little bit about you, your business, and the industry that you're in.
Yeah, absolutely. So I'm Jason Zeramby. I was born and raised in North Kingstown, where I graduated in 2011. I was an athlete growing up, wrestled, played football, where I was a state champ in wrestling, is where I really excelled, and that's kind of where the foundation for where I am started. I was so ingrained in the community with wrestling, and I just loved having that passion and helping people, teammates, and that really translated into my career of being into sales and now as an insurance agent at Comparion. So I currently still coach over at Davisville Middle School in North Kingstown, and I like to say that I want to help children get where they need to be. Just like here, I love to help home buyers with their insurance for their home, of course, with great professionals like yourself and loan officers out there. They usually are referred over to me when it comes down to near the closing, and that's where we go ahead and help them find the right tailored coverages for them. Now, a little bit about my business. I work for Comparion Insurance Agency, which is a part of the Liberty Mutual Group. And at Comparion, I have access to 25 A-rated carriers. And the big thing about that is having the ability to have more diversifying carriers to help tailor specific needs. So, for instance, if you had a home that was coastal, if you had a home that was more inland, an FHA loan, a conventional loan, an older roof, all these variables that I'll kind of explain, different carriers have different appetites for what you need. So if you just went directly to one carrier, the problem with that is you may not find the right tailored coverage because either A, it might just be too expensive, or B, they may not take that type of risk on at all. So by having myself, I'm able to go ahead and shop around with those 25 rated carriers and help you out. Now, another big thing about insurance as well is, of course, I'm going to be there to help you through the process, through the closing. But when you just go directly to an independent carrier, you call 1-800 number, they send you a renewal letter at the end of the process, and they say, here you go, leave it or take it. With myself, I like to say I'm your insurance agent for life. I'm not just there to sign you up and never talk to you again. I do my due diligence and I go ahead and I search. So let's say you have a year policy, which is typical for homeowners insurance. Around month 9 or 10, I put it on my calendar that I'm going to go ahead and see what that renewal is going to be. I get that renewal, I diagnose it, we look at what happened. Did they raise the rate a little bit? Did they lower it a little bit? Did they keep it the same? We have that consultative discussion. We discuss what's the best course of action, and either A, we stay put with the renewal, or B, we go ahead and shop around for what is best fit for you. And when you have an independent agent like myself, that's a big benefit versus just going directly to the carrier. And then the other big thing too is claims, because that's another hot topic. Of course, everyone wants to know how the claim process works. Now, first and foremost, I'm not a claim specialist, so I'll clear that right now.
Sure.
But having the benefit of myself, instead of calling in to the carrier directly, put in a claim, you call me first. We have that consultative discussion again, consultative, what's best for you. And sometimes, and a lot of the time, it's not the best to put in a claim. So for those particular situations, we talk about them as they occur. We have that discussion. We discuss if it's something that financially makes sense to take care of it out of pocket. If it is, you have a good buddy who's a contractor, can do whatever the case may be, the price point's not too expensive. We go ahead and take care of that rather than putting in a claim. Now, in the event that you do need a claim, and I think that it's warranted, that's where I hand you over to our claim specialist with that carrier, and we move forward with that. Because to the claims part, when you put in a claim, people don't realize how much of an impact that makes. So to give you an example, if you put in a claim, one thing I find very common is when people get scheduled properties, so jewelry, wives' engagement rings. I did it myself before I was in the insurance agency, and it's awesome, and many carriers offer that, and it is a good option. And again, it's one of those things where we discuss by case, but sometimes it's not always the best, because what happens, you're with your beautiful significant other, you're at the beach, you lose your ring, now you got to put a claim in. So let's say, like anyone else who loves their spouse, you may spend a little bit on your ring, and maybe that ring is worth $8,000, $10,000, $6,000, whatever the number may be. You call in whoever that carrier is, you put in that claim, obviously it's taken care of like it's supposed to, but then come renewal time, you get that letter and your rate went up 20%, it went up 30%, it went up 40%. I've heard some horror stories. Of course, it varies depending on your carrier, how big the claim is, so on and so forth. But that's a great example where if you just had a separate jeweler's policy, and over at Comparion, on top of doing homeowners insurance, I do various lines as well. So I do specialty lines, jewelry, pet insurance, life insurance, so on and so forth. But for this example, if you had a separate jeweler's policy, now you're going to be able to go ahead and utilize that policy for a very inexpensive price, and it doesn't affect your homeowners insurance. So that's one.
I never knew that. That's great information.
Yeah. Absolutely. And a lot of people don't, and that's why I love to educate and help everyone out. One of the other big things that I wanted to touch upon that's been a hot subject in homeowners insurance is the age of the roof. So a lot of our carriers have different appetites again. So we always have, something to work with depending on the age, but depending on how old it is, there's a certain part of my carrier panel that I automatically can't use because they're very firm on their rule. 10-year-old roof, 15-year-old roof, and then people, well, you know what about if it has a warranty? What about my contractor's, my buddy's a contractor, and he looked at it, and they told me it's perfectly fine, so why is that an issue? And that's where, unfortunately, that the consumer doesn't understand how the insurance world works, and you could have the most beautiful tip-top shape roof that's 20 years old, but an insurance carrier, they have their strict guidelines. They look at it as you're in New England, you're in a weather climate where there's potential for hurricanes, floods, so on. Now, of course, everyone will say, well, there hasn't been a hurricane in years, but from the insurance standpoint, look what happened in California, look what's going on in Florida. So from their standpoint, they can't say, well, you know what, 98% chance nothing's going to happen. What about that 2%? So that's where that comes into that strict ruling on the roof. But again, that's where I have that diverse set of carriers, and we can go ahead and work on it on a case-by-case basis. But that's one of the biggest things, was the age of the roof, that I definitely wanted to discuss here today. I'm sorry, go ahead, Jeff.
So I had heard or read somewhere that Rhode Island has the highest per capita, the highest rate of roof claims on homeowners insurance. Have you ever heard anything to that effect?
I have heard it. From when I've spoke to a lot of clients, it's been a big subject in the last 6 months to a year, so that is correct. I've heard that, and the New England area doesn't fall far behind. So it's really that northeast and really east coast that has that higher percentage of roof claims. And that's where, again, it gets dicey, and you got to figure out how you're going to navigate through it. And a lot of the times, too, just kind of going back to the claims part, sometimes even just calling to inquire about, like, let's say you have a roof that you're thinking about putting a claim in on, you have a, whatever the case is, you're back and forth on it. If you don't have an independent agent like myself, you call in, you just inquire about it, and they actually hold it against you. I had a client the other day, I was running quotes for them. They told me how they thought about putting in a claim with their previous insurance, but they never did. And when I went to go run the report, it showed up as claim. Now it said
Wow.
$0, and it was closed
Yep.
out, so it wasn't like, a massive thing, but either way, it still showed up. It showed up as a potential claim within 36 months. And a lot of the times, carriers, if you have more than 2 claims within the last 36 months, they don't want anything to do with you. So let's just say you called in twice just to inquire, but you never actually put a claim in. Now you have 2 potential things that go against you, and you have no idea until you decide to go shop or you go for your renewal. And that's where, when you have myself, we have those kind of talks to avoid those sort of issues.
All right, that's good to know. Now, you see these commercials on TV for like a car insurance, and they make it so easy. And homeowners insurance, though, is different. You can't just work with some company. I forget the word, like the Zebra or something, and like you go and you an app on your phone, and it seems so easy for car insurance, but with homeowners insurance, things can change. I mean, do you check in with clients, periodically to say, hey, has anything changed, with your home, or, do you need to put an addition on or anything? Do you ask questions like that so that if something happens, they have adequate coverage?
Absolutely. So as I had mentioned before, no matter what, I follow up around renewal, but even before renewal, throughout the year policy, I usually touch base 3 or 4 times, I'll say, call once every quarter or third of the
Mm-hmm.
policy. So I'll follow up, see how it's going, ask those questions to your point, Joe, because of course maybe someone wants to put in a pool, someone wants to
Right.
put in an addition, and that's where, when you break down the coverages, there's certain ways they break it down. And for that example, you got your other structures coverage, and maybe right now it's at a certain number that's good where you are, but obviously in the event of a loss and you have an in-ground pool or a brand new garage, that other structures coverage needs to be added adequately to your policy.
Mm-hmm.
And that's a great point, and I'm glad you brought that up, because that is something I definitely do with all my clients, is to make sure to follow up periodically, at least 2 or 3 times a period,
Mm-hmm.
usually more.
Okay. And now let's say, a lot of times people, especially now where we are in the business cycle, they will do something to add value to their home. If it's finishing a basement, converting a garage, things like that. When they inform you of that, what are some of the questions that you ask? And I know the answers, but I want our listeners, to hear what the answers are and what you're looking for, to protect the homeowner, but then also to protect the insurance company.
So that's a great question, and a lot of the things I ask for once is, is who you're going to do the business with, the contractor. It's always good to know who that is. I also ask how long it's going to take. So of course we need to know when we have it enforced. We got to make sure that it's put in at the right time. I'll also make sure to go ahead and ask the client about what their plans are for when this is done, and if there's any additional things that they need to go ahead and do as well. So a lot of the times when you're getting a pool, now you might want to get a pool house, or if you're getting a garage, you may be getting, you might be getting, jet skis or a motorcycle, and then that's where we kind of have that preliminary. Okay, so you're or you're going to add on this detached garage, which is awesome, and now we can talk about potentially looking into your auto and other things of that nature. But to the homeowner standpoint, we got to make sure that, like, how much coverage you need, so like how many square feet. Typically, I like to say this is a very rough guess, so I'm not going to sit here and say it's definitive, but in the industry a lot of people say that it's usually about $275 a square foot is what a replacement cost would be in the event of doing that. So to your point, if you're going to get a nice new garage, it's good to know how many square feet that garage is going to be, so we can go ahead and can adequately cover you to that X amount of $1,000 that it's going to take to replace it. God forbid something happened and you had to rebuild it from start.
Sure. Okay. Now, another question. So before, I was saying how there is some variability in, homes. It depends on when you're buying a home, the type of mortgage you're going to get will depend on some factors about the home, the type of a home it is, the age of the home. That can impact, the mortgage rate, because have to qualify for a different kind of a mortgage based on how old it is and how much work the house may need for updating purposes. How does that impact homeowners insurance, if it does at all? In other words, if you have a house that it's very 1975 and they're getting a rehab loan, so they're buying it and it's worth $350,000, but they're going to spend a ton of money, and after they're done, it's going to be worth $150,000 more. How does insurance adjust to that scenario?
Absolutely, and I'm glad that you asked that question, because we have one thing that's very big for that. So in your example, you got a house, there's going to be a lot of renovations, so by the time it's done, it's going to be worth a lot more to rebuild. Or potentially. So that's where, again, we talk about that. And one of the big things we have with most of my carriers is we have what's called extended replacement cost coverage. So basically what this is you can go 25%, 50%, some carriers you can go higher than that. And what that basically does is give you a buffer. So to your point, you buy the house and maybe right now the replacement cost comes back at, if it needed to be completely rebuilt, it's $400,000.
Mm-hmm.
But with those new additions, adding in, doing all that TLC work,
right.
Maybe updating the water boiler, electrical circuits, so on and so forth. Now maybe this house, if needed to be replaced, may be worth $100,000 more, $150,000, and that's where we add in the extended replacement costs of 25 or 50. So basically, what this is the buffer. So in the event that you had to completely rebuild your home, your coverage A may be at, your dwelling coverage is $400,000. So if you don't have that additional buffer, if the cost is more than $400,000, now you're out of pocket, and obviously no one wants to hear that in that kind of scenario. So by adding on this additional 25 or 50% buffer, now that $400,000 will be worth $600,000 in the event that we had to rebuild. Now that doesn't mean you automatically get $600,000, but that means that if it's north of 400, as long as it's within that 25 or 50% buffer, we're going to cover all of it right up to what you need. So that's a very good endorsement on most insurance policies that helps for a situation like you're speaking of, Joe.
Okay. Now, how, if at all, is a policy impacted by wood-boring insects? So let's say you buy a house and they discovered wood-boring insects during the home inspection, and it gets treated. Is that something that impacts your policy? Does the insurance company even know about that? Do you even find out about the home inspection report?
So it depends, and that's a good question, because it's actually been another topic that a lot of times 5-6 years ago an insurance company wouldn't ask for a home inspection report, but now it's kind of a case by case scenario, and they potentially could. So in that scenario, it very well could. But that's where someone like myself, I speak to the client, he tells me during our call that, hey, we had some termite damage, but it was the seller took care of it in the home or after the home inspection, it's good. That's where, of course, there's always full transparency with the insurance company, and that's where someone like myself will, going through the process, advise them as I'm supposed to, and I'll refer it to underwriting, or sometimes they won't, and I will send a detailed message. I'll get on the phone, speak with the underwriter, talk about those scenarios, and then, take care of them accordingly. So most of the time, something like that in that scenario. Now, of course, I can't say everything definitively. I don't work for every insurance company, so just making that first and foremost. But in my experience, a lot of the time that won't really be an issue, as long as that it was taken care of, the underwriter was properly informed, we discussed it, they approved it, and we're good to go from there the majority of the time.
Okay, excellent. Now, actually, pause for a minute. Yeah. How can people reach out to you? Give them your contact information.
Yeah, absolutely. So I am Jason Zeramby. My direct cell phone is 401-484-3344. My email address is my first name, Jason, .Zeramby, Z as in zebra, E-R-A, M as in Mary, B as in boy, Y as in yes, and that's at comparioninsurance.com. So either email, phone. I am always one call or email away, and I would love to talk about your potential home purchase. If you're just shopping around, you're one of those clients that got the renewal and their rate hike is expensive. Regardless of what it may be, you're going through a refinance. I can help you in any stage of where you are, either in the home buying process, post home buying, or so on and so forth.
So question, so I was showing houses earlier today, as I think I mentioned before, and one of the houses that I showed to my buyer, there was a like a porch put on the front of it, like a deck, not really a porch.
Mm-hmm.
So it was an older house, and you normally have like 4 or 5 steps to go up, and then you've got the porch. But what they did was they built out from that like an extra 10 feet of deck, basically,
Yep.
over what would have normally been like grass in the front of the house.
Mm-hmm.
And what happened? So the seller, the current owner of the house, did not put that on. It was put on by the prior owner.
Okay.
Okay. And so if someone goes in and buys that house now with that deck attached to the porch like that, how does an insurance company calculate potential liability for something like that? Because I mean, it certainly seems stable and everything, but how is that factored in? Because it would have been 2 owners prior that installed it or paid to have it installed. How do insurance companies adjust for that? So it was something, I didn't do it. It was there when I bought the house.
Yep.
What happens if something happens as a result of that deck being installed?
Now, one of the things that helps avoid those scenarios from the insurance standpoint is, and again, something that wasn't as popular or as common 5, 10, 15 years ago, but typically now most insurance carriers are going to do a post-bind inspection.
Mm-hmm.
So again, it's where my due diligence as the agent, when I'm putting in the information, I need to put in any type of attached or detached structures, so a deck, a porch, and then that's where they ask certain questions in that platform about, how old the building is, how old it may be. I answer it adequately, and the insurance company kind of takes that, puts it into their estimator, and they base the potential liability off how old it may be or how the scenario occurs. But one thing that is very helpful with that post-bind inspection is that if there is anything, so kind of to your point, I had a client that had a porch, but he didn't have a railing. He just had steps, but no railing.
Mm-hmm.
So he didn't tell me that. Now, the one thing about clients, when you're talking, about your house, it's very easy to miss a little, detail or two. So it happens, of course, and that's part of the reason that the insurance company wants to do their due diligence and go ahead and inspect. So when they go in and inspect, he told me that, they reached out, they told him that he needed to add a railing, and they weren't going to raise his premium just as long as he made sure to do that. So that's where, in that kind of scenario that you're talking about, they would kind of come out, they would assess, they would see what they think, and they would kind of go from there, and they'd either say, you need to make X, Y, and Z adjustments, need to add a railing, need to update the deck, and they'll, tell you that you're good where your rate is, or they may say, because they think it's a little bit more of a risk,
Mm-hmm.
that they may raise the rate. But as far as the liability aspect goes, regardless of what we're talking about, the deck, the house, the itself, the fence, the liability is a blanketed thing. So typically with homeowners, we highly recommend that you have at least $300,000 in personal liability limits.
Mm-hmm.
Typically, we want even more north of that, $400,000 to $500,000, and that's where you get a lot of clients that look into umbrella policies, which is an additional layer of liability. But typically, how I kind of explain it for the clients that don't really know what I'm talking about with personal liability. So basically what that is let's say in Joe's scenario, a friend of theirs comes over and they slip and fall on that deck, and potentially it's because that deck was a little bit older. That's where you could potentially have a liability claim. So that person says it was your fault, they sue you for medical damages, whatever the case may be. That's where your liability comes into play, and they cover you up to that agreed amount of $300,000, $500,000, whatever that may be. And that's another big thing about having an independent agent like myself, because we have that discussion, we talk about those scenarios, we talk about what potential assets you have, what kind of net worth you have, and we figure out what's appropriate. So like I had a customer the other day, he wanted to make sure on top of his $500,000 liability limit that he added an excess $1 million in umbrella insurance.
Wow.
And one of the things that I've been told, and it's very much a thing that is true, is that you don't have to be a millionaire to be sued like a millionaire.
Yeah, right.
And that's why umbrellas are very popular and one of those things that I discuss with my clients on pretty much a daily basis.
Yep. Okay. Good to know. Now, I want to take this time to thank our sponsors of the Joe Luca Real Estate Show, and in particular, Vern Rainville. Vern Rainville is a public insurance adjuster. He is licensed by the state of Rhode Island. He is a Northern Rhode Island guy, and his phone number is 484-300-8495. Again, that's 484-300-8495. Vern Rainville, public insurance adjuster. If you think you have a claim, even if it was as far back as 2 years ago, give Vern a call. And he is very knowledgeable, and he will let you know, one, if you have a claim, two, if you have a claim, he will make sure that you receive everything you are entitled to under your insurance coverage. Because a lot of times, these big national companies, they advertise on TV that they come right out the day of the storm or day of the event, and they'll write you a check right then and there. Well, of course, if you think that you just have to get the walls in the house painted and replace the curtains and the furniture, that's one thing. But you may not know what's behind those walls or what's under those carpets. Vern Rainville, he's been there, he's done that. He knows where the potential damage is, and he knows what to look for and how to show that to the insurance adjuster for the insurance company. So Vern works for you, the property owner, not the insurance company. The insurance company's adjuster, the guy or gal that they send out, is looking out for the insurance company, not for you, the homeowner. And if you're paying money every month or every year or every quarter, whatever it is, for coverage, and you have a claim, you want to make sure that you're going to receive everything you're entitled to, because, as we've learned, many times if you do have a claim, your policy is going to go up, and in some cases, you may actually get dropped in certain situations. So we'll talk to Jason a little bit more about that in a moment, but just remember, if you think you have a claim, give Vern Rainville, 484-300-8495. Give him a call. Even though that is not a 401 area code, Vern is a Rhode Island guy, and he will get back to you within 24 hours. Give him a call, 484-300-8495. And of course, if you're going to be moving furniture, if it's from one side of the house to the other, or moved out of the house because you're having work done, or moving your whole household from Woonsocket to Westerly or Rhode Island to Georgia, G-Metz Moving and Storage, the best move you'll ever make. gmetzmoving.com. You can get a quote or book your move on that website. And again, they take small jobs. No job is too small. So don't think that just because you have an apartment to move, that it doesn't make sense to hire G-Metz Moving. It does make sense. They're not as expensive as you think, number one. And number two, if you do it on your own, or you hire some monkeys from, Craigslist, you could end up paying more if somebody gets injured, or they slip and furniture breaks, or there's a hole in the wall or something like that. It could end up costing you more than you would have paid for licensed and insured professionals to move your belongings. So G-Metz Moving and Storage, check them out at gmetzmoving.com. And of course, if you're consummating a transaction, buying or selling, we will refer you to Compass Title and Escrow. Anthony Betancourt and his team over there do a great job taking care of our buyers and sellers. We just had a closing with them the other day, and again, they did a fantastic job. That's Compass Title and Escrow. So without further ado, I want to turn the camera back around to Jason, and we're going to talk a little bit more about some things that may not seem like they could be an issue. And this is a question I have. Jason, I've seen commercials on TV for a company that has a product that you can spray on your roof. If you think your roof is going to be having problems, you call this company. We're not going to say the name, but you spray it on, and they say your roof is like new. If you know this question, the answer to this question, how do insurance companies respond to that, if at all? Do they even have any experience with that, or is it too new?
I would definitely say it's on the newer side. So it's new in the industry, and I've heard a few times about it. So far in my experience, they don't tend to react to it too much
Mm-hmm.
unless it's something that comes up at a potential claim,
Mm-hmm.
or if there's a an inspection and they said the roof was so many years old, but they tried to put some of that stuff on it to sugarcoat it. Unless it's one of those kind of like
Mm-hmm.
scenarios, I haven't had too much experience with it, but I'm glad you asked that question because it definitely put it on my radar,
Mm-hmm.
and I'm gonna definitely do my due diligence as I come across it here in the future because it is an up and coming trend.
Yep.
So I look forward to getting more to that answer as it grows in popularity.
Okay. Now, what about architectural shingles compared to regular three-tab shingles? Does that, is it more expensive to insure one or the other? Do you get discounts for one or the other?
And I'm glad you asked that question. Yes, architectural shingles is what insurance carriers prefer,
Mm-hmm.
and they give you discounts based on that. So that is definitely a good one to have on any type of architectural shingles. Typically, again, I'm not in the roofing industry, but I've
Right.
been told that most roofs that are done in recent times do have the architectural shingles, and it's
Mm-hmm.
one of the more preferred. So that definitely makes a huge difference. The insurance carriers give a discount for that versus having different types of roofing. So yes, absolutely.
Now, here's like the question of the I guess of the hour, because I even today had experience showing a house that has solar panels. I've sold houses as
Ah,
far as my listings that have had solar panels, and they can be confusing.
yeah.
Um, I had one house that I showed last weekend, and the solar panels were actually paid for, so the buyer would assume basically ownership of the solar panels free and clear. So in this case, he would not have to make any monthly payments. He would only receive the benefit of the lower electric bill every month. But how do solar panels impact a homeowner's policy? Because it seems like it's like a chicken and the egg thing. Well, the solar panels are on the roof, so the roof isn't getting, as much wear and tear from the sun and the wind. But if you do need to do something with the roof, the solar panels have to come off, and that could create, I would think, more problems. So tell us, our listeners, a little bit about solar panels, please.
Yeah, absolutely. So solar panels, of course, is a big and up and coming industry. It gets more popular by the year. In a lot of the ways, so whenever I have a client that has solar panels, the first thing that I'll ask is if it's going to be their primary source or if it's going to be a supplementary electrical. So there's some people that get solar panels and they're strictly off the grid and all their electric is coming from their panels. More commonly, I've seen hybrids where they do have the solar panels, but they still have an electric circuit breaker and they still utilize regular electricity. So that's the first thing. Typically, if it's a hybrid scenario, um, it doesn't the insurance carrier doesn't care as much. They won't inquire for as many questions. Now, if it is one of those scenarios where it's going to be fully the electrical, now, it's not like an insurance carrier won't take on that type of risk, but they're going to ask further questions: how many kilowatt each panel is, how big they are, how much of the roof is covered by them. And depending on some of those answers, they might go ahead and adjust the premium based on what that particular risk is going to be. And as far as the replacement cost, to your point about, if you had to, God forbid, go from scratch, and now you got to also go ahead and potentially look into replacing solar panels as a potential claim on the homeowner's policy. That also plays a factor as well. And that can go ahead, I'm sorry, that can make an insurance company raise the replacement cost estimator. So that's one of those factors where if you have a home without solar panels versus a home with, it's going to adjust that replacement cost adequately, and that's kind of where that buffer comes into as well that I was talking about with the extended replacement cost, because then you can help add for that additional money that it may cost for that replacement along with the roof. Um, but as far as them, with utilizing the electric, just to kind of go back to that point, the reason that the carrier wants to know so much if it's going to be the strict source of electric is because if God forbid something happens, there's more of a chance you're going to have to put into a claim. If you're in a home and you don't have electricity, you can't live there. So that's where you could potentially put in a claim for what's loss of use. So basically, that's one of your coverages where the insurance carrier will cover your hotel, your groceries. They make sure, I like to joke around, you're not going to be at a lower grade motel. We're going to make sure you're in adequate area and your laundry, so on and so forth. So if you have solar panels that are strictly the main source, something happens, it's more likely versus a hybrid that you may have to utilize a claim, and that's where an insurance carrier will adjust their premium and replacement costs adequately for that appropriate risk.
Now, what about, do solar panels or do insurance companies factor in whether or not solar panels have a greater risk of there being some type of a fire risk compared to a house that doesn't have solar panels?
In my experience, no, that
Okay.
one hasn't had. Now, again, of course, I work with my carrier panel, and I
Right.
can't speak to the entire industry.
Sure.
But in my experience, no, that's not really hasn't been something that's raised a red flag to adjust the premium and the everything when it goes into tailoring the coverage because of having solar panels.
Okay. Now, also, we're going to ask some other questions because, I've been in thousands of homes and you see lots of different scenarios and levels of condition that homes are in, and then not just the structure themselves, but what about if you have a house and it's a great house, but let's say the front walkway is all like kind of a mess, or the driveway is kind of like, as I call it, a hillbilly driveway. Does that, I mean, I know those things affect curb appeal of a house, but do they affect, is that identified as a potential liability, to use your term?
It could be, and again, that's where they go ahead and they ask those adequate questions, and that's where the post-bind inspection comes in, because again, you would hope and assume that all clients would give you all the details, but sometimes it's not always the case. So in those sort of scenarios, that's where, yes, if there's faulty stairs, if there's a messed up driveway, as you were speaking of, those are things that definitely could, and that's where even if the insurance company doesn't find out off the bat when they're insuring the house, that's where they usually will find in the post bind, they'll take pictures, and then that's where an agent like myself will get the email, the phone call, they're going to do X, Y, and Z. Either A, they're going to up the premium because it was something they didn't know, or if it was really bad, maybe they would go ahead and drop you because it's a risk they don't want to insure. Now, that's not always the case, and I don't want to scare clients to thinking that those scenarios are very likely. Of course, I can't say that it's off the table. It's happened. There's clients out there that can tell you it's, in this world it happens. But that's why it's so important to have an independent agent like myself and to make sure that we have that thorough discussion. Because I've had a lot of clients tell me that they're impressed with how much detail I ask. They'll say, "Oh, I called another insurance carrier and they basically asked me for their, my name, date of birth, and address, and they just went and found me a quote." And I can't speak to them and I can't speak to their process, but one thing I can speak to in general is that I like to say that's, helping somebody with their insurance with a blindfold on.
Right.
Like I say, as a wrestling coach, for an analogy there, it'd be like me trying to teach somebody a technique that is the complete opposite of what you're supposed to do.
Right.
So I love to always make sure to get those adequate details, and that helps take care of scenarios like that because we tackle them in advance, make the necessary adjustments, maybe shop around with a different carrier that has an appetite that's more for that particular home versus the one that we're looking at right now. And that's how I really, I'm proactive, not reactive.
Yep. And it's, one of the things I'm trying to ask questions that potential home buyers or potential homeowners, your answers would be helpful to them. So when they're looking at houses with their realtor, these are things that they could factor in. Because the thing is, if you don't have the right insurance or adequate insurance, unfortunately, you're probably not going to find out about that until you need the insurance. So that's why if you have insurance with, one of those, internet insurance companies, you may be paying less every month, but you also may not have enough coverage when the time is right. So that's one of the things I'm trying to provide information for prospective home buyers. So another question is if you have someone that's looking at it, quote unquote, antique house, something that's over 100 years old, compared to a house that maybe, or let's say 200 years old, 100 years old, 50 years old, and then modern construction, are they looked at? Are they assessed or valued, or do they have different levels of risk from the insurance company's perspective?
Yes, that is a good question, and I've ran into that a lot. Yup. When it comes to older homes, pretty much I like to say any home that is older than 1900,
Mm-hmm.
that's where we have a particular appetite of carriers that take on that sort of risk, and that's where we do certain things depending on the circumstances of the home. Let's say it's an investment or a flip and somebody's buying it to just fix it up and he knows in advance that it needs some TLC and it's not in the greatest shape. So that's where we look into different types of coverages that we have tailored to that.
Mm-hmm.
Certain situations we could do roof exclusions if it's something that is of that sort of appetite that we
Now, what is a roof exclusion?
So roof exclusion is basically in the event of, let's say you have one of those antique homes that you're speaking of, it's very old, the roof's, 35, 40 years old, just again throwing a random
Sure.
number out there, and it's deemed that it's not in the greatest shape. It's a tough home to insure. So again, not going to mention names, but we have specific carriers that will help with that potential risk. And that's where they'll add in what's called a roof exclusion. So to get you the coverage, what they'll do is just say that in the event of a claim, we're going to cover everything else, but we're not going to cover the roof. Now, again, that's not always the best case scenario, and I'm not sitting there saying that in that scenario that I would always advise that. Of course, we want to avoid that if possible, but you have those scenarios where, I'll go around my 25A rated carriers, and they're just not taking it, and they don't want that kind of risk. And to their point, that's a pretty substantial risk to take in. If they know off the bat we have a very old home that was built in 1850, just to throw a number out there, and the roof's 45, 50 years old, do they really want to go ahead for an old term, is the juice worth the squeeze for the insurance company? So that's where we may think about those kind of tailored things. Is a roof exclusion something that is applicable? A lot of the times it's not, but I have certain carriers that can help with that specific sort of appetite. So if you are in those scenarios, I can work with you as well.
So how from the insured's perspective, if you have a roof exclusion, so they have homeowners insurance, but the roof is not covered. So does that mean if shingles blow off, they're not covered, but if a tree falls through the roof, it is covered? How does that work?
So basically, the roof exclusion it would be zero coverage for it.
Okay.
So again, it's not something that is always advisable. A lot of the times it's not. I just bring it up because it's a specific scenario that clients run into.
Yep.
So again, I just use it as an example. For a more accurate example, like, let's say that the roof was 25, 30 years old and the house was built in 1850. Before we would go to the drastic measure of a roof exclusion, we may look into what's called actual cash value versus replacement cost.
Okay.
So to kind of explain the difference there is replacement cost is rebuilding your roof to the value that it's worth today.
Mm-hmm.
So if your roof was built, 20 years ago, and 20 years ago that roof was worth $50,000, we're going to pay $50,000 to make sure we adequately cover it. With actual cash value, they do what's basically the value minus depreciation. So I like to say it's kind of like a garage sale type thing. So if you have an older roof, they may only give you actual cash value. So in that scenario, to your point, the house, the roof, the tree falls down, the shingles fall off, you're still covered. It's just now it would be on an actual cash value basis versus a replacement cost basis. And that's a more applicable scenario for someone that might be in that scenario where they don't want to give you replacement costs, but then we go ahead and give you actual cash value.
Okay. All right. Very good. So, folks, I hope you're paying attention. Our guest this week is Jason Zeramby from Comparion Insurance. And we're talking about a lot of the ins and outs of homeowners insurance because, again, homeowners insurance, it's a necessity, and you don't want to find out that you didn't get the right insurance or enough insurance when you need it. So by working with someone, a local insurance provider like Jason, and again, he has several companies that he works with, so he can, quote unquote, air quotes, shop around what would be the best one for you and your home. It makes a big difference. And there are a lot of questions I'm asking Jason so he can answer them for your benefit. The listeners of the to the Joe Luca Real Estate Show, because when you're shopping around for houses, folks, and you're looking at that beautiful, antique colonial built in 1750, you may not be thinking that, holy cow, that's going to be a bear to insure. Maybe it will, maybe it won't. Maybe it's a flip. Somebody put everything new in it. Maybe it won't be that bad, but at least have that information at your fingertips or in the back of your mind that, okay, I'm going to have to make accommodations for insuring this house that would be different if I were buying something that was built 5, 10, 20 years ago and had a more recent roof on it. We've already talked about the benefit of having architectural shingles on your roof, because they do last longer. Many times they have a lifetime warranty. And these things are probably helpful to insurance companies because insurance companies, they look at everything through the lens of what's called potential risk, potential liability. I remember when I bought my house and the guy came out to inspect it, and there was a tree that had a branch over the driveway. And he was like, that is a potential liability because your mother-in-law could come here and park her car there and that branch could fall off and crunch her car. He goes, that is a liability. So you want to try and remove that from being a potential liability. So things like that, that's, I didn't know, then I knew. So information can be helpful because you don't want to find out something like that. Branch falls on your mother-in-law's car, you put the claim in, and then all of a sudden you don't have insurance anymore because they drop you the following year. What happens to folks when they get dropped? How does that work?
Yeah, so it could be a pretty scary scenario. You kind of just they typically will send you a letter and they'll let you know that, we're dropping you effective this day. So typically it's not like today you're dropped. They'll give you 2-week notice, a month notice, whatever the case may be. So they send you that letter. They tell you the official date that you're expired. So in theory, you could still put in a claim through the day that they drop you. But then once that day comes, that's where you get, with someone like myself, we go ahead and we shop around. We see why you were dropped. We look into those discussions. Sometimes it's too many claims. Sometimes it could just be potentially something that's a little bit possibly not all in your control or not, like a weather-related event, a dog, potential breed that, you didn't know that they didn't allow. So we kind of diagnose that certain issue, regardless if it's claims, liability, whatever the case may be. And then we go ahead and we shop around for the carrier that best fits your specific needs. And then typically speaking, even in situations where you got to go to underwriters and get it approved, typically we can get a new homeowner's insurance policy within 48 to 72 hours, give or take. And we go from there. And again, that might be one of those scenarios. Let's say it was a bad claim and the roof, was $50,000, you put in a claim for that. Maybe we talk about an actual cash value just to adequately get you along for 6 months or whatever the case may be. Then we go ahead and switch you back to a replacement cost. Excellent. But that's where we have that tailored coverage that me and you have that consultative talk about.
Great. Now, if someone wanted to reach you, what's the best number they could reach you at?
So my best number is my cell phone number directly, because I'm not always in the office, so I like to give the cell phone so you can catch me if I'm out with a client or if I'm out, in the public. 401-484-3344.
Awesome. Thank you very much, folks. We're at the end of the time for the Joe Luca Real Estate Show. We will be back next week, same bat time, same bat channel, right here on WNRI. Thank you very much. Take care. Bye-bye.